So if you think about the AI supply chain right now, everybody wants to get their hands on NVIDIA's chips, NVIDIA's GPUs. So working backwards, NVIDIA manufactures and outsources their manufacturing of their GPUs to Taiwan Semiconductor Manufacturing Company. And Taiwan Semiconductor Manufacturing Company buys some of the most cutting edge technology for its facilities from ASML. And that's true for companies like Micron, Intel, Samsung, and others that rely on ASML's cutting edge technology to use for machining for those semiconductor chips that they're producing for partners. So if you're bullish about artificial intelligence, then ASML should be on your radar. And for many investors, it is. And that's why I'm covering this company. And right now, I'm going to answer the question if I think ASML stock is an attractive buying opportunity for investors in 2026.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
So looking back over the previous decade, ASML's revenue has expanded from 6.9 billion in 2016 to 31 billion in the most recent trailing 12-month period. That's good for a compounded annual growth rate of 19%. Now, the company produces some of the most cutting-edge machining tools that help companies like Intel and Taiwan Semiconductor and Micron produce the semiconductors that they then sell to their customers. ASML, according to many industry experts, has what is known to be a technology that's so advanced that only it can produce the technology. Second place is so far behind it's non-existent. And the benefits of that is that it has a near monopoly. It can price its product at nearly any level and its customers would buy it. Now, of course, that's an exaggeration. There is no product that you can price at nearly any level, but it's just a figure of speech to highlight the fact that ASML has significant pricing power. It can command increases going forward, and customers will still likely pay those prices. But also, its technology is providing such a good value that buyers want that technology because it allows them to then sell the output of their production at higher prices. And so ASML is in a great position to benefit from this tailwind, and management is extremely optimistic about their future growth prospects. And this has also been one of the more profitable companies already. The returns on invested capital had been improving from 13.7% in 2016 to 21.7% in 2024, before soaring to 49.8% in 2025. Now, longer term, their trajectory is likely to uh, go towards historical standards, where it'll likely rise into the mid 20% and low 30% range over the next 3 to 5 year periods. But there's going to be cyclical moments where demand for their technology increases so significantly that profitability also increases meaningfully in those moments. And you get a similar story when you look at their cash flow from operations to sales ratio. It had been on a very nice upward trajectory. And then the economic reopening was a headwind for the company because you can imagine demand for electronics had decreased during the economic reopening. And also, there had been so much pull forward during those years for companies that wanted to enhance semiconductor manufacturing that it created a bit of a lull, and now they're recovering from that lull. And you're seeing expansions and diversifications from some of their biggest customers, including Intel, which has spent aggressively building new manufacturing facilities. Micron is building new facilities. Taiwan Semiconductor Manufacturing Company is building new facilities to diversify away from Taiwan. So all of which they're filling with ASML's technology, or at least considering filling with ASML's technology, and looking forward the next 5 or 10 year periods arguably look better for ASML than at any point in the past. So looking at those metrics we evaluated, it's clear that ASML is an excellent company with great prospects. But the best investment, the best company could make a poor investment if the price is too expensive. So let's evaluate valuation. On a forward price to earnings and forward price to operating cash flow, ASML is trading at a forward PE of 37 and a forward price to OCF of 33, which I would say is fair value for a business of this quality to trade at these valuation metrics. I would say is fair value. Now, when I measure ASML stock using my proprietary discounted cash flow model, I get a different picture. The market price at $1,107 is significantly higher than my intrinsic value per share of 693. Now, that difference is large enough where it goes beyond the margin of safety, which I apply at 10%, 5 to 10%, and beyond any estimates or assumptions that I used that may be well below what market participants use. So overall, I get a picture of ASML stock as being overvalued when looking comprehensively at both the market multiples method, which points to a fair valuation, and then looking at my DCF valuation method, which points to overvaluation. So combining the market multiples with my DCF, I get a company that looks overvalued. You could argue slightly overvalued, not ridiculously overvalued, and I wouldn't argue against that. It's such an excellent company. It deserves a premium valuation. So paying a little bit of a premium price for this business, I think is worthwhile. However, this much of a premium, I think, is a little too much. So I've had this stock rated as a hold, and I last updated November 21st, and I will reiterate that recommendation going into 2026. This looks like more of a hold to me than a buy at current market prices. By the way, did you know about our exciting channel membership program? You get so much for less than $5 a month, including dozens of exclusive videos, access to exclusive research on over 100 stocks, and early access to many of my videos before everyone else sees them. Click that join button below to learn what this program is all about.